Hello and welcome. My name is John Richardson, and I am speaking to you this evening from Toronto, Canada. It is Friday evening, the 12th of January, and I'm joined in this presentation by Dr. Karen Alpert, who is actually speaking with us from Australia, where it's much warmer, and it's Saturday morning, January the 13th. How are you this morning, Karen?
I'm fine this morning, John. How's your evening going?
Well, the evening is great, but I think there's a huge discrepancy in the climate between where you are.
Yeah, well, today's high is supposed to be 35, so I think I'm going to melt, but that's okay.
Oh, well, I don't like the heat. I much prefer the icy roads and those kinds of things. But thanks very much for joining me with this interesting topic. I mean, it is such an exciting time to be a taxpayer in the world in general. And I think
especially a U.S. taxpayer.
Oh my God, there is no substitute for it, is there, Karen?
Oh, and then what they've just done to the U.S. tax code, they think they reformed it.
Imagine calling that tax reform. So you start with the rotten core, the rotten foundation of the 1986 Internal Revenue Code, and rather than trashing the whole thing and start all over, you build a second floor on it. Incredible.
Yeah, and add more complexity, add more loopholes, and add a $1.5 trillion deficit over 10 years.
God, that sounds just so incredibly rational. But I mean, there must have been something good that came out of it.
Yeah, there were some individual tax breaks, but they all expire after 2025. And there were some domestic business tax reforms. That's probably the biggest thing that people hear about. We've dropped the tax rate from 35% down to 21% for domestic corporations.
So the corporations were the actual beneficiaries of this. I mean, that's pretty awesome to go from 35% to 21%. I mean, that is absolutely not only a definite tax savings, but my God, that would make the United States, at least in theory, competitive with the rest of the world.
Certainly brings the tax rate below Australia's.
Well, that's interesting. So what do you think? Will Australia respond by lowering its tax rate? Are we having a race to the bottom here?
I think it's going to be like lemmings, all going off the cliff together.
Well, it'll be very, very interesting. There was a lot of lobbying on behalf of Americans abroad trying to get the United States to, I think, recognize the problems of being subject to the U.S. tax system, living outside the United States, and, trying to get some rationality here, some change to the rules. What happened?
Nothing. Zip. So nobody really asked for what expats would really like, which is, why doesn't the U.S. join the rest of the world and tax based on residence rather than citizenship? It works for every other industrialized country.
Well, so by residence taxation, you mean presumably the novel idea that people should pay tax to the country where they live. Is that what you mean by that?
Yeah. Where they live, where they use the schools, where they use the roads, etc. I mean, I consume these services in Australia, not in the U.S.
Well, that's certainly true. But it is a big problem because, on the one hand, it's quite interesting because the Internal Revenue Code basically operates like this. It says all individuals on the whole planet are presumptively
subject
to U.S. taxation on a worldwide basis unless you're a non-resident alien.
Yep.
Right?
Yep. A little carve out for non-resident aliens. And if they had forgotten to write that section, it'd be like they were trying to tax the whole world.
Yeah, that's right. So, I mean, it doesn't even, in its base language, it doesn't even really distinguish between residents and citizens, I don't think. It treats them all the same. And of course, I suppose that, if this were raised, they'd say, well, what's the problem? I mean, we treat everybody exactly the same.
Yeah, we treat everybody exactly the same, but that doesn't mean that it's really equal, does it? Because identical treatment's not the same as equal concern or equal respect.
And, nobody understands equal protection, which is, of course, guaranteed supposedly by the U.S. Constitution. Nobody understands equal protection to mean identical treatment. And what it means, if you consider scholars like Rawls, Dworkin, and people like this, okay, is that it means the equal concern and respect of the legislative bodies. And of course, if Congress is indifferent to Americans abroad, they certainly can't respect or have equal concern for them, which I think is the base problem here. Anyway, the renunciations continue because of it. No question about that.
No question.
It's interesting to me, though, that, I do think that, it may not have been executed perfectly, but I certainly do think that there was a serious attempt on part of a lot of people, ACA, Republicans overseas, all these groups, and a number of individuals who, wrote to the House Ways and Means Committee in 2013 and the Senate Finance Committee in 2015 to get this stuff changed. And, it's almost as though, they never made the effort at all.
Well, certainly ignored. There were some changes, though, that did affect expats, right? I mean, first of all of the general individual provisions are going to affect expats, right? Some
of the important ones.
Yeah, well, things like they've decreased the top marginal income tax rate from 39.6 down to 37. So if your income is up that high, you're going to be getting a lower income tax rate. They've also increased that standard deduction, which means that you don't have to keep track of itemized deductions if you've got less than $12,000 worth of deductions for an individual, or $24,000 if you're filing joint. But of course, all Americans abroad should be itemizing whenever possible because you want to maximize that foreign tax credit, right? The other thing they've done is the mortgage interest deduction. So if you've got a mortgage, or if you open a new mortgage that's more than $750,000, there'll be a reduction in the allowable interest.
Right. And of course, Americans abroad who live in any sort of major cities of the world are quite likely to have mortgages in excess of $750,000.
Well, certainly in Sydney, where the median house price is about that in US dollars.
Right. And, in Toronto, I think I live in Toronto. It seems to me the average house price is now in excess of $1 million Canadian dollars, without any difficulty at all. Basically, though, the pillars of the Internal Revenue Code that make life a living hell for Americans abroad remain. The basic principle that Americans abroad are treated as though they live in the United States remains.
For the most part, they remain, and unless you are just a straight salary earner, you're going to have some problems.
Yeah, absolutely. A straight sort of yes or no. Do you think there's anything about the changes that has made filing for Americans abroad any easier?
Only marginally. Not having to itemize because of the higher standard deduction. That's about it.
That would be about it. I think that's right. So there's still the basic problem that all of these assets, financial planning, retirement pension plans that are located outside the United States are considered foreign by the United States, and therefore, frankly, a presumptive form of tax evasion.
Yeah, that's the main problem with citizenship taxation.
Well, I certainly would expect the renunciations to continue.